The Dow Jones Industrial Average closed up 33 points Tuesday, partly on news that European leaders were taking more aggressive steps to solve the continent's debt crisis.
We have a very deep interest here in the United States in making sure that process is resolved.
While a vast ocean separates Europe from the U.S., economy watchers say the globally connected economy brings the continents much closer together.
A number of economists have pointed out that the problems in the Eurozone are a potential threat to the U.S. economy.
The United States is a manufacturing-reliant economy. It isn't the majority of our economy, but it's still significant. And so as the U.S. looks to send products overseas, other countries like China and continents like Europe are very important for U.S. manufacturers and, at the end of the day, employment.
About 20% of our exports go to Europe.
When the U.S. had its own financial crisis a few years ago, that took down financial markets around the world. That was a reflection of how interconnected all of these markets are.
Eurozone leaders representing 17 countries that use the euro agreed to give Greece the next installment of its bailout loan. The agreement will give Greece nearly $11 billion. There's also talk on a previously forbidden subject, the possibility of handing over more budget power to a central authority. Also Tuesday, British officials lowered their outlook for growth, blaming the euro crisis.
Much of Europe now appears to be heading into a recession caused by a chronic lack of confidence in the ability of countries to deal with their debt.
European presidents and prime ministers will meet next week. At that time, they could discuss structural changes to the Eurozone itself. Matt Friedman, The Associated Press.